welcome to CNBC TV 18. I'm SHEREEN and we're coming to you from Monte Carlo. This is where the World Entrepreneur of the Year Awards, hosted by EY for 2016, will take place. This happens every year. Entrepreneurs from over 50 countries participate in this program. And of course, representing India, Vinita and Nilesh Gupta of Lupin. I've had a chance to catch up with the global team of EY, Mark Weinberger, the chief of EY globally, to talk to him about what really he's concerned about, what are the key priorities, and of course what the outlook for global growth is. Here's an excerpt of that exclusive conversation.
The uncertainty is very high, and I call the uncertainty tax. We've talked about it in the past. You've got Brexit and what that may mean for investors in and out of UK and Europe.
Are you running a Brexit poll? Everybody else is.
We don't have, no, I'll look at their polls. We're waiting to see what happens like everyone else is. You've got the US election. You've got elections around the world. You've got prices of oil going up and down and commodities and China, slower, long growth. The difficulty is really trying short term to figure out where you should be positioning yourself, Seema. But the entrepreneurs who are here and the best businesses around the world aren't distracted by all that noise. They're really looking longer term, see where the signal is, not the noise, and seeing where the big trends are, where they need to be investing for the longer term. Those are the ones who are going to be successful.
But where is capital headed? I mean, India, of course, is the exception. We're growing at about, you can quibble about the numbers, but at least 6.5–7% plus. And in terms of foreign direct investment, it continues to be a strong inflow. What's your sense about the strength of India? And when you talk to investors, is India the preferred destination today?
Yeah, India is still one of the top destinations in the world for capital, and its FDI, as you said, is continuing to increase. Some of it is the caps that have been lifted on investment, you know, in the retail e-commerce space, in the urban as well as the rural spaces now. There could be investors directly investing in India, more infrastructure. As the country moves towards more reforms on the tax front, some of the new laws they put in place, there's a lot of optimism, and so people who are looking long term are looking at India. We all know it's happening a little slower than maybe everyone thought 2 years ago when the excitement was so great. Everyone said we're going to see immediate returns. It's not the case. But that being said, relative to everywhere else in the world, India's finances, its economic situations, its investment climate is still very, very high.
You know, we were talking about the Brexit, and we don't know which way it's going to go. We'll find out on the 23rd of this month. But if there were to be a Brexit, do you think that that's going to change the dynamics, both in terms of inflows and outflows, even to emerging markets, for instance?
Well, any uncertainty like that, Seema, that would hit the entire world. I mean, anybody who's looking at that, and you have a major change in the Eurozone for the first time in so long in the European Union, what would that mean for Greece? What would it mean for, you know, France and Italy and Spain? What would it mean for the other countries? That uncertainty would put I think, a pall on overall investment. So that would hurt, I think, the global economy right away. It wouldn't last forever because people would figure out what to do once it happens. But I do think that level of uncertainty and the contagion it could have would cause investors to say, wait a minute, let's see how this sorts out before we invest fully in CapEx, which has already been going down for 4 years.
And what about the Fed? I mean, do you get a sense that perhaps we are going to see a move, you know, anytime soon, or do you think that what's happened on the jobs front may put a pause at least on the Fed's plans?
It's really hard for anyone to predict what the Fed does. As you say, there's always some new information that comes out. What's clear, Federal Reserve would like to get back to normal monetary policy. They'd like to start slowly raising the rates again. And so fiscal policy and business acumen will drive how the growth is going to happen, where jobs are going to come from. We're not seeing inflation, though, anywhere really across the world. So I would think that the Fed wants to go ahead and increase. With the Brexit vote coming up in June, with the jobs report, as you pointed out most recently, it was very disappointing. It's going to be a negative weight for them on that decision. Okay.
You talked about the U.S. elections. You know, how are the markets reading the possibility of Donald Trump in the White House?
I don't know. I mean, the markets right now continue to be fairly strong. Today's a little bit of a down day, but they've been going up for the last several weeks. I think what the markets are looking for, no matter who's in office, is the candidate going to really be able to work with the other side of the aisle, the political aisle? Are they going to put people around them that are going to try and do things and get past all of this negativism, all of this criticism, all the arguing back and forth, and say, what constructively can we do for the next 4 years to rebuild the economy, to create jobs? That's what people are going to be looking for till the election, and then right after the election, what are the early signals from whoever the president is going to be?
Coming back to India, Prime Minister Modi was in DC addressing the joint session of the US Congress. I mean, making the same sort of pitch about India and the US being natural allies, strategic partners, democracies and so on and so forth. But beyond the outreach, and he has managed to woo investors to come and relook or revisit the India story. Companies like Amazon, incremental investment of another $3 billion, taking the total allocation to about $5 billion. But what more perhaps are investors looking to the government for?
Great point. So the Prime Minister is terrific at explaining his vision for India and, Made in India and all the different projects he's got going on. What investors are looking for now is the ability to follow through on the execution of real infrastructure creation, of real reforms in the financial markets, of a tax system that's laid out by the finance minister, to lower corporate rates over time and to reform the goods and services tax. All these things have been on the table, and as we look to future elections, as of course the Prime Minister's party only controls the lower house, as he gets more support, the hope is that these will start to come to reality. So I think a lot of people really like what the Prime Minister says. They see India as an attractive environment. We do need to see the reforms start to take root.
Let me ask you about tax, and I don't know if you've been following what's happened on the Mauritius-India DTA, but we have now seen that being amended. And this is part of what we're seeing happen across the world, this crackdown as far as tax avoidance is concerned, tax havens. How do you see that changing the tax landscape, not just in India, but around the world?
Well, that's more uncertainty, because what's happening is, as you're pointing out, different countries are instituting their ways to deal with the base erosion and profit shifting, the BEPS proposals that the OECD put together, and India has actually come up with its own approach, and they've dealt with the Mauritius tax treaty. The certainty of having those new rules is good. They are going to increase taxation on foreign direct investment in India to some extent. So that's a reality. But they're also aiming to try and do away with that double non-taxation. And what was happening, the courts and the administrative officials were wading in and applying it haphazardly. With clarity of rules and knowing exactly what companies need to do and consistency of rules, that's very important for India anywhere else. So this will bring some consistency and clarity
so it won't
to what
actually
India's trying to
deter
do.
investment from coming in?
I don't think over the long term. It depends how they're going to be enforced. How the new GAR rules that are also taking place now, how are they going to be enforced? As you know, in India, we've had a history of companies being challenged retroactively. The Prime Minister did a great job of trying to say that won't happen anymore. Now we're going to see over the next couple of years whether that will be true or not.
When you talk to investors who are looking at the real India opportunity, and yes, reforms need to be executed on the ground, but there was a lot of talk about defense. It's moving slowly, and those are sectors that typically move slowly. Oil and gas now seems to be one of the sectors that the government wants to try and draw in investors after a long hiatus. What are the sectors that look exciting from an investor point of view at this point in time?
Well, you got to think consumer products and retail with the number of people, certainly young people in India, and how they're growing. That's huge. Infrastructure's big opportunities for helping governments pull out infrastructure in India. That's huge. Energy is going to be huge as cities are built and urbanization takes place. Defense will be an issue. Telecommunications and technology, as we have increased usage around different parts of India, going hopefully from the urban out to the rural areas. There's untold opportunities across the landscape because of the population growth and the low cost of energy there as opposed to everywhere else in the world, because they're importers of the low gas prices and oil prices as opposed to exporters that are being hurt.
Rajiv was on a short while ago and he was talking about how 2016 is going to be a good year as far as deals are concerned for India. But what about globally? Do you believe that we're going to see some big ticket M&A action?
First of all, whatever Rajiv says, I believe. So if whatever he says is true, I guarantee it. Yeah, it is. We've done our own study called the Capital Confidence Barometer globally, and more than 50% of the companies in the world are looking to do deals still. Now, it doesn't mean they're all going to get done. Government's coming in, disrupting them. What you're seeing is a lot of Chinese companies now investing outbound into Germany, acquiring German companies, U.S. companies. They've had some $100 billion in outbound investment, which is really, really large. You are seeing inversions, that the whole issue of U.S. companies trying to get better, more beneficial tax systems and foreign acquisitions of U.S. companies. And you are seeing companies who are merging for growth. They're merging because they need to disrupt themselves and have new business models. We do see it, and our business and advising on mergers and acquisitions is really going through the roof. It's incredible how busy we are. So we do know these deals are under works.
So before I let you go, the top 3 challenges that you're most worried about today.
Uncertainty, uncertainty, uncertainty.
And that says it all.
That's it.
On that note, we're going to take a quick break, but when we return, we speak with Rajiv Mamani, the country head of EY in India, to talk about what's going on the ground.